So the real beauty of Bitcoin is it is that natural frequency. And that's what protects the network or provides the network security in what I'll call a tactical sense. On any given day, you have to go through that wall of digital power, and you don't have, and all the power is controlled by the network operators, not by you. So that's a tactical, the tactical defense system for Bitcoin. The strategic security or the long-term security, and here I mean security over 100 years, over a century. The security that keeps Bitcoin from being banned or keeps a government from seizing all of the Bitcoin miners, etc. That comes from a combination of economic power, electrical power, computing power, and political power.
Michael Saylor provides an insightful perspective on the security and resilience of Bitcoin, emphasizing its unique structure and defenses. Imagine Bitcoin as a castle with two main layers of protection: the immediate day-to-day defense and the long-term strategic security. The day-to-day protection comes from what Saylor calls the wall of digital power. This is like an invisible, impenetrable barrier that surrounds the Bitcoin network. To try and breach this wall, one would need to overpower the massive amount of computing and electrical energy that secures Bitcoin, a daunting, if not impossible, task. This energy and computing power aren't held by any single individual, but are distributed across the entire network, making it a collective fortress that everyone contributes to but no single person controls. For the long term, envision a more complex form of protection that goes beyond just technology. This involves a mix of economic strength, the vast amount of electricity needed to run the Bitcoin network, computing power, and even political influence. This blend ensures that Bitcoin remains resilient against threats like government intervention or the potential for it to be outright banned. It's like having a council of guardians, each wielding different forms of power, safeguarding the castle for not just years, but centuries to come. In essence, Saylor sees Bitcoin's security as a sophisticated blend of immediate, tactical defenses powered by technology and a strategic long-term safeguarding that's rooted in a mix of economic, political, and computational strength. This dual-layered approach not only makes Bitcoin incredibly tough to compromise on a daily basis, but also secures its place in the world for generations to come.
So the Bitcoin miners, they're channeling electrical power and computing power, right? So they're the physical part, but the political power comes from the hundreds of millions of people that own something that's a derivative of Bitcoin. Whether you own MicroStrategy stock, or whether you own a Bitcoin spot ETF, or whether you own stock in Block or stock in Coinbase, or whether you own the Bitcoin itself. I mean, all of these things, put you into the political community, and you're going to use your political power to lobby. And then the other thing that really secures Bitcoin is economic power. And I think that it's worthwhile to point this out because this is an artifact of Satoshi's brilliance. Satoshi created an immaculate conception, and we had a fair launch. And those million Satoshi coins never moved, and there was no pre-mine. And that means that the only way you have Bitcoin right now is you spend a huge amount of money on equipment and electricity to mine it, and capital to create mining centers, or you bought it with real cash. And we can back calculate how much money's gone into mining, but I don't think it's unreasonable to suggest $20 to $40 billion has gone into the mining ecosystem. I mean, you can trace billions of dollars of capital just to individual companies like Marathon. So between 10 and 100 billion is how much has gone into mining. But if we look at how much fiat currency has gone into the other side of the equation, let's take MicroStrategy. As of now, I personally am aware of having put more than $5 billion into the network, and I'm not 1%. And if you look at, there are a lot of other ways to get at it, but if you look at the 4-year simple moving average of Bitcoin and assume that was a reasonable surrogate, you can kind of arrive at a conclusion that nearly $600 billion of real capital has been put into this network. So $600 billion of real capital from who? From Fidelity, from BlackRock, from every institutional investor in the US, from every institutional investor in Europe, from millions of individuals, from representing pension funds, retirement funds, etc. So you can trace a huge amount of capital that's been put into this network. And ultimately, the security of the network is going to come from the actions of the people as voters and the actions of the economic actors, the capitalists, and then also from all the businesses, the application companies like Cash App or Coinbase, have an impact, and then the miners have an impact, and they all have lawyers and CEOs and lobbyists and employees, and they have nexus and they pay taxes, and therefore they have supportive mayors, governors, senators, etc. Now, this is an interesting framework. I'd invite you, if you want to analyze any competing network, put any competing network, any other crypto network on the same framework and ask, how many dollars of real capital have been invested?
Michael Saylor shares a comprehensive view on what makes Bitcoin uniquely powerful and secure, diving into the intricacies of its infrastructure and the vast network
emphasizing
of
its
support behind
combination of
it.
economic,
Let's break down his
electrical,
insights into more
computing, and
digestible
political
pieces,
power.
making it easier to
He discusses
understand.
the decentralized
pillars of
nature of power
Bitcoin's
in the
strength.
Bitcoin network,
1.
contrasting
The
it
miners,
with
the
traditional
backbone.
financial systems.
Think of Bitcoin
Saylor
miners as the
highlights
dedicated
Bitcoin's
workers of
substantial
a vast
economic
digital mine.
impact, backed by
They
a
use a
massive
lot of
investment
electricity
from
and
various
powerful
sectors.
computers to mine Bitcoin,
He also
which
compares
is like digging
Bitcoin
for
with other
digital gold.
cryptocurrencies,
This
like
process
Ethereum,
is not just about
particularly
creating new
noting the
Bitcoins,
differences
but also about
post-Ethereum's
keeping the
proof-of-stake
Bitcoin network
transition.
safe and running smoothly.
Furthermore, Saylor explores
2.
the nature and
Political
commitment of
power, the
investments in the
people's
crypto
voice.
world, likening
Imagine if
Bitcoin
owning
to
a piece of
high-value
Bitcoin
assets
or
such as
anything
real
related to
estate
it
or art.
gave you a say in a
This
huge
comprehensive
digital
analysis
democracy.
offers a
That's what
nuanced
Saylor points
perspective on
out.
Bitcoin's
Whether
position
you
as
own
a digital
Bitcoin
currency
directly,
and a
invest in
long-term
companies
store of
involved
value,
with Bitcoin,
underscoring
or
its
even
unique
hold shares
status
in
in the
related
digital
funds,
currency
you're
landscape.
part of a large community that can use its voice to influence decisions and protect Bitcoin's interests. 3. Economic power, the investment. Saylor admires Satoshi Nakamoto's, Bitcoin's creator. Genius in launching Bitcoin so fairly, without giving anyone a head start, no pre-mine. The only way to own Bitcoin initially was by mining it, which required a significant investment in technology and electricity. Over time, people and companies have invested billions into mining, showing how much they value and believe in Bitcoin. This massive financial commitment acts as a strong foundation, securing Bitcoin's future. 4. A comparison with other cryptocurrencies. To understand Bitcoin's unique position, Saylor suggests comparing it with other cryptocurrencies. He mentions Ethereum as an example, especially after its shift to a different system, proof of stake, that doesn't require mining. This change reduces the amount of physical and economic resources backing Ethereum, making it different from Bitcoin, which still relies heavily on both. 5. The role of supportive infrastructure. For Bitcoin, it's not just the miners and investors who contribute to its strength. A whole ecosystem of businesses, lawyers, lobbyists, and even political supporters play a role in safeguarding Bitcoin's network. These include tech companies, trading platforms, and various stakeholders who benefit from Bitcoin's growth and contribute to its defense. The essence of Saylor's message. Michael Saylor paints a picture of Bitcoin as a fortress, supported by a combination of digital mining power, economic investment, political influence, and a broad community of supporters. He highlights the uniqueness of Bitcoin's launch and growth, emphasizing the significant resources, both physical and monetary, that back it. In contrast, other cryptocurrencies might rely more on their community's political power than on the tangible resources that underpin Bitcoin. This collective effort from miners, investors, supporters, and businesses creates a robust network that secures Bitcoin's present and future, making it an unparalleled digital asset in Saylor's view.
Then you're invited to calculate if Bitcoin miners have invested somewhere between 20 and $50 billion in permanent capital for digital power, what percentage of all the digital power capital or digital capital does that represent of all cryptos in the world? I mean, 95% would be probably the minimum number you could conclude. It's a number between 95 and 99%, I think. right? Which is why you come back to the conclusion that you have one thing, which is a digital property, a digital commodity, a digital monetary system, and is perfected for this. And then everything else is just a speculation. The difference between money and speculation is if it's money, then the largest holders are buying more. And if it's speculation, the largest holders are selling. So the real issue is, are the hodlers buying or are they selling? I'll give you an example of great asset classes that are money. Apple stock is money. Apple is buying more, and a lot of people that own Apple stock will buy more. New York City real estate or London real estate or Palm Beach real estate, luxury real estate is money. Because if you look at wealthy people, they're not selling. There's no one bragging about how they sold all their nice places in Palm Beach, New York, and London. They're buying more, right? If you've ever met a rich family that has real estate holdings, they don't sit around saying, yeah, we're going to diversify and we're going to sell next year. We're going to get rid of the entire portfolio at a huge profit over 10 years. What they say is, I'm looking forward to the next deal where we're going to acquire this building, or we're going to buy this other thing, right? They buy and they hold. And they typically buy and hold to give to their children's children, right? The same is true with art. If it's good art, collectors, Frick, Andrew Mellon, they didn't buy art to flip the art, right? They're not speculators. I bought a Picasso so I could sell the Picasso, right? They wanted to buy them all. That's why they call them collectors. So if something is deemed to be really valuable, you bought $1 billion of it, and your goal is to buy another $1 billion of it. And so if you think about all these things, which thing in the crypto ecosystem is that, right? Bitcoin is that, right? I bought a bunch of Bitcoin. My goal is to buy more Bitcoin, right? It's just a very simple acid test. Do you have an exit strategy, or is that the exit strategy? Andrew Mellon's exit strategy was, I'm going to buy all the great art I can get my hands on. I'm going to build a beautiful building in Washington, D.C., and I'm going to endow the National Gallery with the art as a gift to the people of the country.
Michael Saylor makes an engaging comparison between Bitcoin and other forms of investment, illustrating Bitcoin's unique position in the digital world. Let's simplify and explore his insights. Bitcoin, the digital powerhouse. Imagine a giant pie representing all the money invested in the digital power of cryptocurrencies worldwide. According to Saylor, Bitcoin miners have baked the biggest slice of this pie, investing between $20 to $50 billion. If we were to guess, this slice would be somewhere between 95% to 99% of the whole pie. This massive investment shows how Bitcoin stands tall like a skyscraper among other cryptocurrencies, which might seem more like small houses in comparison. What makes Bitcoin different? Saylor draws a clear line between Bitcoin and other cryptos, likening Bitcoin to valuable, long-term investments such as art, luxury real estate, or even stocks of successful companies like Apple. These aren't just investments. They're more like treasures that people hold on to, hoping to pass them down through generations or add more to their collection. Bitcoin and investment treasures. A comparison. Luxury real estate and art. Just as wealthy individuals continuously invest in luxury properties and prestigious art, aiming to keep these treasures within their families for generations, Bitcoin holders, or hodlers, view their digital currency as a precious asset to accumulate and cherish over time. Apple stock. Similar to how Apple itself buys back its stock, showing confidence in its value, Bitcoin investors keep buying more Bitcoin. This behavior indicates they see it not just as a speculative bubble, but as a reliable store of value, akin to holding a piece of a tech giant. The collector's mindset. Think of collectors who acquire art not to sell for a quick profit, but to enjoy and share with future generations. Bitcoin, in Saylor's view, fits into this category. It's something so valuable that the goal is to acquire more over time, not sell. The essence of value. Money vs. speculation. Saylor proposes a simple yet profound way to distinguish between a speculative asset and a true store of value. Are the largest holders looking to buy more, or are they selling? If they're buying, it's akin to money, something you trust and hold on to because you believe it will retain or increase in value over time. This philosophy is what sets Bitcoin apart in the digital currency world, according to Saylor. In essence, Bitcoin isn't just another cryptocurrency. It's a digital form of money that people are not only eager to hold onto but also eager to increase their holdings in. It's like being part of an exclusive club where the goal is to collect and preserve, not just profit and sell. This mindset mirrors the approach of art collectors and investors in luxury real estate, marking Bitcoin as a unique, highly valued asset in the vast sea of digital currencies.